Joined today by Steve Todoruk. He's an investment executive with Sprott Global Resource. Steve, good to see you. Thanks for joining me.
Thanks for having me, Albert.
Enjoyed a panel session you participated in recently at the Precious Metals Summit, and as knowing you, as I expect, you were talking about new discovery plays. So I thought, great opportunity to bring you in here, talk about this style of investing. Can we go for the novice or for someone who's not familiar with these different types of opportunities? Can you just talk a little bit about what a new discovery play is?
Sure. I found over the years investing that the most exciting and most rewarding thing of investing in this sector is if you can get involved in little exploration companies shortly around the time when they announce a new discovery. It's very hard to make. We're lucky to get 3 to 5 good discoveries made a year in the mining industry. So if a junior company is involved in that eventful sort of situation, it's a good time to get in early, buy shares in the market. If the company can successfully drill and grow that deposit, it usually take about 2 to maybe 3 years of drilling. If they're able to accomplish that, they've ended up with a valuable asset. The market's consistently re-rating and revaluing the market cap and the share price of the company type of thing. And so if you can get in early, ride it all the way, the best outcome is if a big mining company then comes along and takes them over at a higher price. As an investor, you should make good money in that investment.
Right, so you say exciting, obviously exciting because the earlier you get in, the bigger the reward if you're correct.
Exactly.
But in this style of investing, you don't get in too early, in the sense that, like you said, these discoveries are hard to come by.
Yes.
And so a lot of these efforts don't result in discoveries, and so you're taking out a lot of the risk, I'd assume, giving away some of the reward, but taking out a lot of the risk.
A significant amount, I'd say, not a lot. There's no guarantee in this strategy.
But how many of these efforts result in, what percentage of these efforts result in discoveries?
Well, like I said, if there's 1,000 to 15 companies in Canada and that many in Australia, and you're only getting 3 to 5 good discoveries a year.
Right.
Very small
out of several thousand.
Very small number of them.
Right. So you're mitigating that part of the risk.
Yes.
Now you're looking at a different risk.
Yeah.
So you have a discovery. We don't know what. We don't know if it's economic. We don't know what it's going to amount to ultimately. So there is a discovery phase within that, right?
Right.
Okay. So talk about that.
What I'm looking for in the discovery announcement is usually it's going to be in a drill hole. So I want to see a nice wide drill hole intersection that's either going to support an underground mining operation or an open pit mining operation. Underground's going to be narrower interval. Open pit's going to be really wide interval. Then I want to see economic grades of whatever the commodity is in question. Usually it's going to be gold or copper. I want to see economic grades that could be mined economically at today's metal price, ideally at even lower metal prices. That doesn't happen very often, so if I see that first good drill hole, or in a couple of cases in trenches right on the surface, that's the initial ingredients I'm looking for, and then I want to quickly evaluate other things, political risk, how's the infrastructure, how remote is it. I want to look at those kind of other bits of information as well as the drill hole information.
Now, I would guess that the market, being as excitable as it is, may tend to overreact to these discoveries when they occur.
Always. They're almost always. It's classic discovery reaction. It's especially in the kind of market environment that we're in right now, and we've been in the last couple of years, and going back into the bear market. I almost think today we've seen a couple of discovery-like announcements. I think investors are almost desperate. They're looking for something to get involved in to try and make money, and because this has been going on, we're getting more and more people that are sort of catching on to this, and they're just looking for any kind of a headline announcement that they're perceiving to be good, and they're piling into the stock, and stocks are going up dramatically, and some of those situations today, I'm a little worried that investors are going to end up getting burned.
Right.
But I'm looking at all those, and some of those I'll pass. Other ones I'm looking for the ones that have the right ingredients for my liking, type of thing.
Okay. So, and what did you guys talk about specifically on that panel?
I did 2 interviews on the panel. There's a couple other gentlemen that had different sort of fields of expertise in what they do in this space. Joe Foster was one of them. manages funds and whatnot, so he's got a very different skill set than what I do. Another gentleman was with Resource Capital Funds, and they specialize more in private equity investments. And then my background and forte is more involved in retail investors. My clients are mostly retail investors, so bringing that knowledge and just sort of talking about each of our experiences as to what's going on right now and what we see in the space.
Okay, so would you say this is a particularly exciting time for this type of investing? I mean, we've seen booms in the past where it's really paid off.
Right.
Is this potentially one of those times?
No.
Or? Okay.
We're definitely not in a bull market. We're not anywhere near to a bull market, but we're in a much better environment than we were 2 to 6 years ago in the bear market. In general, I was just going to say gold prices at $1,200 are pretty good, but you wouldn't know it. Most of the majors just announced their quarterly results the last couple of days, and there's a lot of disappointment at this gold price. There's a few different things going on there, but at $1,200 gold, most companies should be able to make a profit. Most are, and that trickles down to the junior mining companies, whether they're able to raise money, and we're definitely seeing a very common theme is the better exploration companies are attracting the interest from the major mining companies. The majors are doing significant private placements, commonly at a significant premium to what they're trading at. They're not taking warrants, which saves on share dilution for the juniors. So we're seeing a lot of that going on, and that wasn't happening during the bear market. The majors were just cutting costs everywhere they could. They weren't looking to finance or get involved with juniors, and what happened there was, with all that cost cutting, they had nothing in the pipeline. They weren't doing their own exploration. So now that they are making some money, they're trying to catch up, and they're being forced to do deals that you wouldn't normally see with junior exploration companies, which is a good thing for the sector. It increases the chances for guys like me that we're going to have discoveries with juniors being cashed up.
Okay, cool. Any parting thoughts or tips that you want to give to people out there who are interested in this particular sector and your method of investing within it?
Well, it's pretty difficult. Like I said, I look around me and I see which stocks are going up, and I know what's happening. People are, in the good ones I like that I'm participating in. There's other people getting in. That's good, but some of these other stocks I think are setting itself up for some pretty big disappointment somewhere down the road here. So, if you try and find somebody to work with you to help you out, or read somebody that can give you some kind of advice, but be cautious.
All right.
You always have to do a lot of homework and due diligence.
Good advice. Thank Steve Todoruk, Sprott Global Resource Investments. Thank you very much.
Thanks.